Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we'll bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at container prices and leasing rates around the world and in key locations to see a little bit where the market is heading. Let me quickly share my screen to give you a little bit more guidance on what I'm talking about. This is our insights product. Here we are looking at trading prices specifically, and this is the by now well-known picture of the price divergence between China main ports, which are the green lines here, just Qingdao and Shanghai sort of taken as examples, and main US and European trading locations, here the blue lines, Antwerp, Hamburg, and Houston as a US location. And you see that since end of last year, when the situation in the Red Sea started to escalate, prices have started to diverge quite significantly up to the price gap that we see right now with $3,100 to $3,300 for the foot high cube cargo-worthy container in China, and still around $1,300 to $1,500 in the rest of the world, namely the key European and US locations. Now, what we hear from the market today, and I thought this was worth sharing, is that supply is now there. So sellers have held on to their equipment in hopes of further increasing prices, which was a good bet over the past couple of weeks, as you can see here. And this was also the narrative that we've seen at the Intermodal a couple of weeks ago. And right now, especially with sort of the Hamas organization starting to answer to the ceasefire plan presented by President Biden a couple of days ago, there seems to be some movement on that front. And with that, some expectation that potentially the situation in the Red Sea might come to an end sooner rather than later. I think there's still a lot of uncertainty around that, especially because the Houthis are not the Hamas, and the Houthis also have a political agenda that is not necessarily exactly the same as the Hamas, but nonetheless, sort of a calm down in the Middle East, of course, bodes well for the situation in the Red Sea. And so traders are, specifically container buyers, are now a lot more cautious, essentially seeing these high prices as potentially the top of the market trend and a potential decrease in the coming weeks, and are therefore much more reluctant to buy containers at these prices than previously. So we see still high prices because these are the offer rates, but much lower trading volume at these prices, and that can potentially point at a downturn of prices over the coming weeks. So that is, of course, a very interesting thing to observe. Now, that's it from us for today, just sharing a couple of insights from our markets. Feel free to drop comments or questions in the comments. Very much looking forward to hearing from you. And apart from that, see you on Friday. Take care.